All right, and welcome back for another episode of Carnivore Trades. Today is Friday, June 17th, 2022. If you like the content, give the video a thumbs up, comment, subscribe, etc. Come find me on carnivoretrades.com for swing trading, alerts, and analysis. Just closed out another winner today, by the way. Short Chevron. And this is one we had for a little while here, and I was telling you guys for a while about not chasing energy. And look at the fall today on Chevron here, down 5%. 182 all the way down to 146 in about 2 weeks here. You can see the XLE here tanking down before peaking at 93 all the way down to 73. So a 20-point drop here on a $93 equity in a matter of about 2 weeks here. Now getting some support at this trend line. But again, just goes to show you these things that go parabolic, they go parabolic down too. And remember a few weeks ago I told you guys that I had XLE topping out in the month of June, and currently we still got about a week and a half left. Remember, next week is a shortened week, but we have an engulfing reversal on the monthly so far. So I said that in the month of June we'd probably have a blow off top here, some type of a peak, and then I expected a major correction here. Now we didn't go quite as high as I thought we would. I thought we would push up a little bit higher. I had Chevron actually getting up to possibly 188, 189 max move, but we never quite got there. Either way, still starting to work out. It looks like energy has topped here, at least for now. You see crude oil here down over 5% here. So crude coming off the lows here was down a little bit more than that, down 6% actually. And, basically trying to hold that daily 50 moving average right now. But a nice fall here. There was some talk from Putin. He did mention that he wanted to rebuild relations and so on and so forth with Ukraine. So there's now speculation that maybe there's going to be some type of a resolution. If that happens, that could be the catalyst for the summer rally that we've been kind of talking about. Markets haven't got, we've been looking for kind of a capitulation move, a washout. It's still possible we get that next week. I still think the markets do bottom next week. That's kind of my thesis right now. And by bottom, I don't mean the forever bottom SPX 6000. I mean the bottom for the next, month or two at least. But we are into these levels here, that 360, 358 area. So this was your previous all-time high there. And then you got this, pivot right there. You got the gap breakout. So if we were to flush down next week, there'd be a ton of support in this area. I've been showing you guys the 100-week moving average, or excuse me, 200-week moving average, which is at about 350. That would be kind of a max downside I would see in the near term. And then the triple Qs, you're very close to that 200-week moving average as well. You also got that pivot low. So those are the levels I'm watching here. And on the daily time frame, you can also see it on the weekly here as well. But on the daily, you've got that down-sloping trend line that's been going on since January. We kissed it yesterday, got a little bit of a bid off of it. So we'll see if we get a reaction now. Each time we've hit this, we've kind of hit it and then rolled over and then pushed up. And hit it, rolled over, and then pushed up. So maybe we hit it this time. Maybe we get that one little flush that I was talking about, roll over, a little secondary rollover, and that's kind of the catalyst for the next sort of squeeze or rally, so to say. So just some possibilities here. The S&P here on the spiders, it did get through this trend line on the daily time frames, but a lot of the time you get these trend line breaks. It can be a fake breakout, especially when it's a trend line that's down sloping with lower lows. So just be aware of that. But again, either way, you're coming into support here at that 360 handle. So again, like I've been saying the last week or two, I think we do flush out, but the downside is a little bit more limited. It's not like we're going to have a major crash or something like that at this stage of the game. Although, I wouldn't rule it out. In this market environment, anything can happen, so you got to be on your toes. But I don't personally see it happening currently at this time. IWM, however, is a little bit of a concern, because you are through this major trend line, this monthly trend line. Now, again, it's a monthly trend line, so it could pierce it, and we've got another week and a half left. If we bottom next week and rally into the end of the month, they could save this trend line. Again, it's very common for trend lines to pierce, especially on a monthly time frame. There's there's about 20, 22 trading days or something like that in a month. So it can take, some time to play out on a monthly time frame. But again, really good support level. You bounced off of it last month. Now we dipped a little bit lower. We'll see if they save it here going into the end of the month, but that is an important level to watch, and we'll definitely be keeping an eye on that as well. Overall, a relatively quiet day. We had a chance to break down early on, and then they kind of saved it. You know, Opex games, they probably got some put buyers FOMOing in the morning, and then they kind of pushed us higher here throughout the day. Now we've really just stabilized. A relatively quiet day overall, considering it being an options X day, but generally pretty range bound, which is kind of common, you know, just kind of burning out theta, burning out those calls inputs at the same time. So a routine day here, and we'll see what we get next week. We'll see if maybe we get some more rumors out of the over the weekend, or maybe some actual facts or news over the weekend, furthering kind of, you know, a peace talks or something like that. That would cause the market to go gangbusters in the short term. So be aware of that. But if not, I think it's very possible that we could flush out a little bit. I think today's action, today's green close on the market, we still got 40 minutes left, so the market could close red still, but the relief bounce in any case is more so just Opex related to me, so I wouldn't rule out a little bit more downside tomorrow, or excuse me, on next week, on next Tuesday. I wouldn't rule out a little bit more downside, as a lot of this could be Opex related. So again, whatever the catalyst is for this summer rally, I expect it to probably coincide with either one of these levels here. If we flush out first, that's what happens. If not, we get news over the weekend. We could squeeze before then. But either way, again, like I said, I think the downside is a little bit limited here. In any case, semiconductors here, again, same kind of deal. Let's flip back to get rid of these lines here. So there we go. So again, kind of like the spiders, breaking through that yellow line. We're into that 200 level. But again, like I said yesterday, we hit it once, or essentially got down close to it once, and then kind of put in a lower high and rolled over. So we'll see if it can hold. If it gets through that, it may have to go down to that 190 area where that pivot high is, and that breakout bar. And then your really max downside in the near term would be that 200-week moving average right there on the weekly. But I don't see, I mean, that would be quite a bit of downside here from the current level. IGV here, again, still kind of a stronger sector, as it is holding that double bottom. So cloud stocks continue to be strong, relatively speaking. Dow transports here trying to hold on to double bottom, but it's been weak. It's been a very weak sector here over the last couple of months. Ever since that failed breakout here, it's just been leading the market lower and continuing to make lower lows. So definitely making note of that there. Interest rates did back off a bit. And again, a lot of this having to do with kind of the market's shifting more to, it's not inflation fears now, it's more is recession. And if there's recession fears, that's going to be, it's going to at least make investors think twice and make bonds look a little bit more attractive than where they are at current prices. And I think that this could be an early trade potentially. I'm not going to say that we couldn't have another leg up in yields if we really have panic, especially, you know, possibly next week. I wouldn't rule that out. But, you know, the bond trade, yields are way overdone. And if we do have recession, then bonds are actually an attractive look here at current prices. So we're getting a little bit of a bid here. Here's the 30-year, you know, coming back in as well. So bonds getting some relief. We went to that double top that we talked about a week or two ago, or maybe earlier this week on the monthly time frame. So into that double top and then piercing the 200-month moving average. So two areas of resistance. Then you have all this selling here just above that. I like these setups here. So nice pullback there for yields. We'll see if that can continue and bonds can continue to get a bid. High yield debt HYG coming a little bit off the lows, so starting to make a few higher lows here. So again, that could be a good sign for the market in the near term. But obviously, you know, credit spreads are, you know, a main concern right now of the market. But we'll see if it can hold up here in the near term. If it does, that will be a good thing for the market. Home builders here trying to, you know, still made a 52-week low today, but came off the lows. Again, another weak sector. These credit spreads are going to affect housing prices. You know, I don't think I need to explain that to anybody. ITB down as well, coming off the lows here, just up 25 basis points at the current time. And VNQ here, trying to hold double bottom. I would have felt better about this if it tagged 85. And again, if we do flush out next week, I do expect it to do that, but it is holding up here today. XLF here up a 1.2% here. Again, just coming off the lows, I've showed you guys the levels here. We got through that that 3150 handle there on the weekly. So right in there, that previous high, and again, basically kissed that 200-week moving average. So maybe it gets a little bit of a bid off of that. Again, like I said yesterday, a lot of things are coming into some pretty good levels here. Broker dealers up again today, but again, still on the low end of the chart and still a weak area, especially being affected by credit spreads. All right, so we talked a little bit about energy. Crude trying to hold this 50-period moving average. Looks like it may hold that by the end of the day. And he basically came down and kissed that 100. I would have felt a lot better for a long trade on this if we had gotten down to this trend line and pierced that 100 moving average. So take a look here. If we go back, so this trend line goes all the way back to March of 2021. I think that's a good area for a bounce if you can get there. Now, if you get through that and you start taking out these pivots, crude's probably in corrective mode, and it probably wants to go down and test this longer term trend line here, which I was saying for quite a while. I wanted it to go hit at about 85, but actually this goes back farther than the weekly here. We got to go to a monthly, so all the way to 2015. That was your breakout. Again, this breakout never really got back tested, and again, like the XLE, look how extended you are on the monthly. Even with this recent little fade, still so extended from that 20-period moving average. We look at the XLE here on the monthly, even with that engulfing reversal that we have so far. Look how extended it is. 20-month moving average is all the way down at 56 bucks, and this is at 74. So again, very extended. There's still some room to go for energy, and this is why I keep saying every single day, don't chase these things, because they will come in. You'll get a chance to buy them again, and that has been proven to be a smart thing here. So coming into this trend line right here, doesn't mean I can't get a short-term bounce here, but it does look like to me that energy is now in backing and filling mode. So just do with what you will with that information. Nat gas here. Again, I said yesterday, got that bounce, got up to about $8 and got rejected there. So pivot low and then pivot high. That's kind of been a point of interest for nat gas right at that 8 handle, and now getting rejected. It's trying to hold this trend line for now, but I think it wants 650 and then maybe $6. So we'll see what nat gas does here next week. Maybe you can hit those levels later next week. And then dollar index getting a little bit of a bid here, reversing off of this trend line. So it back tested that 104 area, and it's holding up for now. You got to respect the dollar. It's holding up. It's strong. And what can you say? It's above all the moving averages until it really takes out this pivot. I'd give it the upside bias right now, possibly to 108, 108.50. I think those are the levels I gave you guys earlier this week. Then gold here, bit of a pause day, kind of pulling back a little bit. Wouldn't make too much out of it. It's hanging in there. It's performing as a store of value while everything else is getting slaughtered. So it's holding up okay. If it can get back above these areas and get above this pivot, it's got upside to about 19.25. Silver here, pulling back as well. Nothing too crazy going on. Again, upside is $23 if it can get going. Then platinum also pulling back. Again, I still think this has to go lower. Palladium pulling back as well. So kind of starting to play out a little bit of an inside bar bear pattern here. We'll see what it does next week. And then copper here, lower today as well, getting through that area. So I do have good support around 390, maybe 385 or so. I'll have to run the numbers again, but that's what I had on it before. That's where I thought it was going to go. And, sometimes it takes a while, but the math does usually work out. We'll see if we can get down there maybe next week or the week after, but a little bit of a fade here on copper, and now getting through that pivot low from a month or two ago. All right, so flipping over here to Bitcoin. It just looks weak, honestly. I thought I had a good chance. I liked how you had that nice green candle the other day, Tuesday, and then, Wednesday. And we kind of held this tail, and we put in another tail with good volume. Then we retested the lows. It just looks really soft. You're not getting much of a bounce. I would have thought that it would have at least been able to come up here and maybe backtest this 20 moving average at the very least. But there's a lot of negative news going on with crypto, a lot of blow-ups, and nobody wants to be in it right now because no, nobody wants to wake up to your position down 20% in the morning. So a lot of traders are exiting right now. Again, if you get through 18,000, it is possible you go down to 12. So those are kind of the levels that we're looking at right now. Maybe you can get a bid over the weekend with the low liquidity and Opex being over with. That's always a possibility, but we'll continue to watch this. But at the current time, it is very weak, and I would avoid it at the moment. All right, so flipping back over here to the spider. So it looks like we're getting a little bit of a bid here. Yeah, nice little pop. We may squeeze into the afternoon. You know, there's possibility they burn out some puts or something like that. Overall, I don't expect too much. They usually tend to keep us rainbound on these Opex Fridays. But a nice little pop here going into the close. Again, we'll see what we get next week. We'll see if Putin says something. Remember, markets are off Monday for Juneteenth. So take some extra time off, get some rest, recover, and so on. Anyways, guys, I'm going to wrap it up here. Come find me on carnivoretrades.com, and I will talk to you all next week.